Would you ever think about driving around in your car without insurance? Jedediah Collins here with the Money Vehicle Movement, where we're trying to make financial literacy a little more current and hopefully a little cooler. More Americans today are driving around without car insurance. Since COVID 19, we saw the epidemic go through everything and everyone. Drivers today are now choosing to forego their insurance policy altogether. Around 10% in 2019, up to 14% in 2022. You think just a few percentage points raised, but when you look at 100 million drivers, each percent is a million people driving around. This has been documented after traffic stops or accidents where the driver fails to show proof of insurance. Ironically, the most uninsured drivers are in our capital, Washington, D.C., where 19,000 uninsured drivers have been recorded. The thought process being that inflation has raised groceries, healthcare, gas, and other expenses, and people are betting that they can go without an insurance policy and retain those premium payments. Why this matters to you directly? Well, first off, every state except New Hampshire requires auto insurance to drive around, not necessarily just for you, but really for the other drivers on the road. And I would imagine most of you listening to this don't live in New Hampshire, so it is a state requirement. But also, when drivers and groups, remember 1% being a million drivers, are cash strapped and decide to drive without their insurance, it reduces the overall premium pool that the providers are collecting. And in turn, that provider must raise their price of insurance, your premium. According to Bankrate, prices have jumped 12% from 2023 to 2024, averaging $2,200 a year or almost $200 a month for this auto insurance policy. States are trying to impose heavier fines, suspending driver's license, even threatening jail time to get more people to purchase a policy. But as you ask tow truck companies across the United States, they are seeing their lots full of cars that have been in accidents with an uninsured owner who will not come collect their vehicle. No doubt the debate about whether to pay your rent or pay your premium is not a very hard one. Pay your rent. But as we look collectively on the trend of people foregoing insurance, you can quickly see how it impacts us all. And the prices will continue to rise for those who drive with insurance if more and more people start opting out of this societal obligation to have insurance on your vehicle and any accidents that you create on the road. There are other ways to reduce your insurance costs other than just skipping it. One we discussed in chapter 7 by raising your deductible, the quote unquote cost to use an insurance policy. Your premium is simply the cost to own the policy, the deductible being the cost to use. If you look at the amount you pay before repairs before your insurance kicks in, your deductible, raising that amount will reduce your premium. They are inversely related. So if you raise your deductible, you will lower your premium payment. Another newer way to reduce your insurance costs is called pay per mile plans, which pays a base rate and then a per mile rate on any more miles that you drive on top of the base rate. If you don't think you're going to drive much, this is a way to maybe save on some of those insurance premiums because you get the deduction or the expense reduced by the miles you drive. People like me who get in a car maybe once a week because I live in this little virtual box. But I do love it because that's how we deliver to schools and people across the United States. The hunt for affordable insurance is on, and you can show people you speak the language of money by understanding why we transfer risk through insurance policies and why we pay the cost to own a policy, our premiums. Keep driving your money vehicle and your real vehicle with insurance, and we will see you at the next stop.